Hi, I'm Kyrie Stein, and I'm here with Tarek Morshed of the Morshed Group at Sotheby's Residential Real Estate in Austin, Texas. Today, we will discuss what happened in Q4 of 2022 in Austin's market, where the market is going in 2023, and what it all means to you, whether you're a buyer or a seller. Welcome, Tarek Morshed.
Thank you. Thank you. Great to be here and really excited to uh, share what we're seeing from all the deep recon my team and I do around our economy, the real estate market, and so on.
So, Tarek, what happened in Q4 of 2022?
So, Kyrie, there's three main things to note for Q4 and 2022 at large. Number one, the market ended up very close to where we thought it would, with one surprising twist. We saw 7% depreciation across the market in pricing in quarter four. And at the same time, looking at the big picture for 2022, prices shot up 15% by the end of June. And by the end of December, it was down that same 15%. So, in spite of all the dire sounding news in the last 6 months throughout the media and such, we basically ended the year flat on price appreciation, which really shows strong resiliency considering news across the stock market, inflation, interest rates, and national job layoffs. Number two, and this is where the twist is, supply of housing ended at only about 4 months, which is actually an undersupplied real estate market technically. And while we were boldly predicting it wouldn't get into oversupplied territory all year, we did think it would be closer to the balance point of a 6 month supply in housing, and we just actually never got that high. And for everybody out there, for context, a 6 month supply or about 18,000 homes on the market is considered an equilibrium market between buyer and seller. At 4 months supply, there's only about 12,000 homes on the market. And note that at 4 months, supply typically were 40% below a balanced market in terms of supply and demand. So we should have actually seen appreciation, but we saw depreciation. And what that's connected to is kind of our point number three is that buyers just really shut it down in Q4. Activity was very slow. A lot of folks gated due to the fear of what's going to potentially happen. And it wasn't that economic fundamentals were off, but there was just a lot of fear, and that's why we didn't see appreciation versus depreciation. This led to homes sitting on the market for about 55 days on average, and sellers ending up about 90% of their list price versus 105% around the middle of last year. So to share like a real world example here, this home in a central neighborhood called Bowden Creek, where prices range from 750 on the entry level up to 6 million. It's minutes to downtown. This home was approximately 2,500 square feet and was priced around 1.8 million. Even though newer construction product in this area is tough to find below 2 million. And so it should have sold quickly, and it wasn't being marketed off MLS, and normally would have sold in 30 days, even in spite of being marketed off MLS. We represented the buyer, and we were actually able to negotiate the price down to a great number for our clients in terms of value, given there just wasn't really any competition on it because, again, most buyers were just gating in Q4.
So, Tarek, what's happening with the market now?
The early returns are pretty much what we expected. A portion of buyers have realized the market isn't going to crash here, and with holidays over, are just kind of getting out and buying again. So things have been picking up for sure. And we think it'll be busier in the next few months than certainly in the last 6 months.
And how do you think things will look for the rest of 2023?
We expect to still see some job layoffs happening in the next few months, probably 10 to 20,000 jobs lost locally over the next few months. But in the Austin of today, that's about 2% of our job labor force. And so there's going to be a more psychological impact and fear in the market versus an actual economic impact that really crushes us from that. but it'll give buyers pause and fear still to move forward still in the next few months. But we think by the end of quarter two, buyers will realize the market really isn't crashing here. And so we expect things to get a lot busier after quarter two. And ultimately, what we see is we're going to see probably another 5% reduction in pricing till quarter two. And then it'll be flat the rest of the year, but then negotiability is going to start trending down. And so really, for the rest of the year, it'll be flat, and then we're kind of going to be poised for appreciation in 2024. So the reasons why we believe it won't be worse than what I just mentioned, there's several main things. Jobs, which is the main engine for our real estate market, and we saw 50,000 jobs added last year in spite of all the bad economic news, and we only lost about 3,000 to 4,000 jobs in the last half of 2022, which is really a lot better than in most cities. For 2023, respected economists like Angelos Angelou and John Huckenius, are expecting 60,000 jobs. Our unemployment rate is only at 3% still currently. And then, so factoring for the coming job layoffs, like we expect the actual number to maybe end up at around 30 to 40,000 jobs, which still creates plenty of demand for housing that we shouldn't go over a 6-month supply. So that's a major reason why I don't think it's going to get worse. Population growth also for 2023, we're expecting to see about 60,000 people per the same economists I mentioned, and also our city demographer, Lila Valencia. And all these folks are going to need housing, right? And then anecdotally, Austin's ranked number 4 in financial health index for major metros over 1 million people, which basically means that households here are poised really generally better for the recession that's potentially coming this year.
So, Tarek, what does this mean for sellers? What should they be doing or thinking in this new market environment?
I think for sellers, they're going to have to price, and sellers speaking to you directly here, you really need to price in 2023 to stand out as a value. Given the fear in the market, and homes that just stand out as value are ones that will get attention and sell. Too many sellers are still pricing to test the market, which simply isn't working, and we're seeing sellers chase down the market when they could have just sold earlier and netted more by being more of a value proposition in the beginning. So just price where you stand out compared to the rest of your competition, and you'll sell.
What about buyers? Should they be buying right now or waiting till even 2024?
We don't think so. We actually feel that buyers, between now and the end of Q2 of this year, 2023, is absolutely your best timing. As mentioned, by then the rest of Austin is going to figure out that the market here isn't crashing. And so likely most of the job cuts will have happened by then, and buyers will have financially also psychologically calibrated around interest rates and even financially. And we also think rates will start inching down towards the end of the year or the middle of the year. And so really this is going to be the best time for best pricing for buyers is through Q2.
Tarek, this has been wonderful information, and we really appreciate all of this education. Thank you so much.
You're most welcome. As always, good to be with everybody here, and it's just a lot of fun for us, and it's our pleasure to provide these kinds of insights via our analytical approach to the market. Please go to the morshedgroup.com for just past market updates, and also we post a lot of information on like a monthly and weekly basis there also, as well as on our social media channels.